Novo Nordisk has fallen by 31% from their all-time high, but despite that, they've had an outstanding 5-year total return of 290%, which vastly outperformed the S&P 500. But will their meteoric rise continue, or is there more downside ahead? Today's video will be an in-depth analysis of NVO stock, covering business operations, fundamental, and technical analysis. Novo Nordisk is a pharmaceutical company headquartered in Denmark, but like most large pharmaceutical companies, the majority of their sales come from the United States, due to our corporate-centric healthcare system and unhealthy population. Although this is disguised by how they label their geographical segments by sales, titling the segment North America, which makes up 63% of their revenue as of their 2023 annual report, followed by Europe, the Middle East, and Africa, or EMEA, at 20% of sales, rest of world at 10% of sales, and their smallest regional segment is labeled China at 6% of sales. Each geographical segment has grown in sales quite substantially year over year, except for China, where sales have declined from $14.4 billion in 2022 to $12.8 billion in 2023. So they are somewhat well diversified by geography, but what about by product type? They break down their sales by therapeutic area, with diabetes care being their largest segment by a long shot, trailed by obesity, and lastly, a tiny portion of their revenue comes from rare disease. We can also see that diabetes care and obesity are the main drivers for their surge in sales, with their rare disease segment actually shrinking year over year by 16%. This is the main risk I see for Novo, which is that their revenue is extremely concentrated in two overlapping therapeutic segments. Or if we look further at their sales by product, one single medicine makes up nearly half of their total sales, which is Ozempic at $95.7 billion. Their next biggest product is insulin at $48 billion, trailed by Wegovy at $31.3 billion, and their last blockbuster medicine is Rybelsus at $18.8 billion in sales. Now let's cover the macro level pros of Novo's business. Despite their sales being concentrated in just a few medicines, these medicines are growing in usage at a phenomenal rate, with the exception of insulin, with the fastest being Wegovy with a year-over-year growth of 406%. In just 2 years previous, its sales were at just $1.4 billion. Ozempic, their most popular product, is growing rapidly too, with a year-over-year growth of 60%. And their last major growth product is Rybelsus, with another massive growth rate of 66%. It's hard to say how long this growth will last, but their patents for these products aren't set to expire for quite some time, with Ozempic, Wegovy, and Rybelsus expiring in the US in 2032. So it looks like there's still room for continued growth, at least up until that time. Better yet for Novo, with all the money they've been making, they're putting more funding into their research and development over time, with a near doubling in R&D costs over 2 years, which increases their chances to have another blockbuster product by increasing the number of products in their pipeline. Another subtle pro to Novo's business is that their products are small and relatively inexpensive to ship, as compared to another company like Walmart, for example, who has to pay for the shipping for their tons of products shipped around the globe, which are subject to things like varying fuel costs, which makes me think that pharma companies are more like software companies and that they sell intellectual products, which is part of the reason why they have such an incredible operating margin, with their last report showing margins of 44%, which is the same operating margin as Microsoft. And just for comparison, Walmart's operating margin is only 4%. I think the growth trajectory for Novo is strong, but their growth is concentrated in just a few products, while many of their products are decreasing in sales. With all of these products and treatment segments having declining revenue year over year, this could be thought of as an overconcentration risk or a lack of diversification by product type, although their decline rates are fairly slow, especially compared to their revenue growth rates for their biggest products. Another potential con or risk to Novo's business is that the majority of their sales and sales growth comes from the US. And if the U.S. reforms its healthcare system, this could negatively impact Novo's revenue. Although this is true for almost every major pharmaceutical company, and given our elected president, this is not likely to happen in the next 4 years. The last and most apparent risk I see is that their most valuable patents are expiring in 2032, which is sure to decrease Novo's revenue growth, which is the case for any pharma company with a blockbuster product once it expires. We can see this through AbbVie's revenue from Humira when it went off patent extension in early 2023, which led to a decline in U.S. revenue at a rate of 35%. Now let's get into the foundation of the business, starting with revenue. Novo's revenue has grown phenomenally over the decade, growing from $88.8 billion in 2014 to $271 billion as of their trailing 12 months, more than triple where they started, giving Novo a compound annual growth rate of 10.1% over the decade. not including their TTM revenue. Although we can see that their growth has happened almost entirely over the last 3 years, and before their main products became widely adopted, their revenue was quite sluggish. Their growth story is even better when we look at their earnings per share, which grew from $5.15 to a TTM level of $26.50, which is more than a 5x increase, giving them a 10-year CAGR of 13.7%, which is partly a function of share repurchases, which they have been consistently prioritizing even before their rapid growth, having reduced their shares by a CAGR of 1.6% over the decade. Or if you prefer to look at free cash flow per share, again, we see substantial growth at a 10-year CAGR of 11.6%. Novo's story gets even better when we look at their current total liabilities level of $41 billion compared to cash and net income, which is currently only at 2.1 times. This is one of the lowest liabilities to net income level I've ever seen, which is nearly on par with Microsoft's total liabilities to net income level of 1.7 times. But if we look at Novo's total liabilities over time, you see they are growing rapidly, although this is also the case with their cash on hand. This feature of being able to look at net income on a non-per-share basis in order to compare it to total liabilities and cash is one of the features I love about Seeking Alpha, and they are currently offering a Black Friday sale of 30% on their annual membership, which lasts until December 5th using the link in the description below. In terms of valuation, Novo is trading at an objectively high multiple at a TTM PE of 32.5, which is due to their fantastic growth. But if we look at their forward PE of 27 compared to their own 5-year average of 30.4, which takes into account their projected growth, they're trading at a discount of 11.5%. But the 5-year average doesn't give credit to their recent growth, which took off in 2022. And if we looked at the PE range since 2022, then they're actually trading at the bottom of their historic growth PE range. Or we could look at their PEG ratio at 1.2, which accounts for their EPS growth rate. And being that this number is close to 1, this indicates value to be had, assuming their growth continues. I think Novo is currently a growth stock, but their dividend may be enticing for someone who believes in their growth beyond their patent expiration in 2032. They offer a TTM dividend yield of 1.4%, which is objectively low and low compared to their yield over the past 5 years. But they have phenomenal growth rates across the board with a 10-year CAGR of 13.3%. A 5-year CAGR of 18.7%, and their TTM growth rate was a meteoric increase of 40%. And better still, they have a dividend growth streak of 27 years. And their dividend distributions look to be well managed, with an average payout ratio of 50% over the decade based on earnings, and an even lower TTM payout ratio of 48%. Based on free cash flow, their dividend looks to be safe as well, with a 10-year average payout ratio of 55% and a TTM payout ratio of 66%. In summary of the fundamental analysis, I think Novo is a well-managed business, growing quickly with almost no debt, and they're trading at a discount, assuming their growth will continue at least until 2032, which we'll see is also shown through technical analysis. Here we see Novo over a 5-year time frame, and the first feature I notice is that their stock has had very low volatility, and better yet, the share price has increased by mind-boggling 260% over this period, not including dividends reinvested, and they are currently trading at a discount compared to their average price over this period, shown by the center yellow standard deviation channel line at a price of $121, meaning they're trading at a discount of 15% at their current price of $102.63. In terms of support and resistance, you can see that my support line isn't a true support line at all, which is because they have basically just been going up, and I drew a support line at the 52-week low. Even better, the next resistance level I see is quite far away, around $140, or higher still at their all-time high. Another value indication I see is that price is below the 90 and 50 EMA lines graphed in purple and blue, again indicating a below average price. And price being below this blue 90 EMA line has only happened twice over this time frame. At the bottom of the chart, again we see relative value shown through the relative strength index, or RSI, which has reached a 5-year low and looks to be reversing as we speak. If you've made it this far, you might be asking, why is the stock down? I think it's because the pharmaceutical sector has been a bit overpriced, which we can see through the pharma ETF PPH, which also recently crashed and brought down NVO with it. And if this ETF reverses here, this could be yet another tailwind for NVO.
I'm not a financial advisor, and this is not financial advice. This is for educational and entertainment purposes.